can see how we managed to get this entry over here. Okay, so what we'll do, just clear my chart. I remove them, and we're going to start from the higher time frame, which is the monthly. Okay, my internet is a bit slow, but no worries. As we can see right from here, we did have this demand area over there. This demand area. We did have this demand area over there. Yeah. Okay. Let me stretch so that I can be able to pull it up. Okay. Yeah. We did have this demand area over here. Let me zoom out the thing here so we can see it clearly. So we did have this area of demand which the price came, and the price came here and took some liquidities, then managed to form a high, which is right this one from here. Managed to form this high over there. So this is the high point which I'll just mark it as an area for liquidity. So let me give it a mark. Sorry, my internet is kinda slow. In Africa, our internet is not very good. So you'll get used to that once you live in Africa. So as you can see, this one here, I want to name it. I want to make it um, right in. Let me put a dollar sign. So this one is monthly liquidity. Okay. So after knowing the monthly liquidity area, we need to spot the supply zone, which is right from here. This is the supply zone area. Right from there is the supply area. So as you can see, we did have a demand and a supply. So what we know, after the price failed to close below this level here, after the price failed to close below this level over there, the price failed to close below this level over there. So it means that there are no sellers. There are no enough sellers to push the market to the downside. So what we need to understand here is that the market has made a failure swing, which is right from this point here to this point there. So the market has created a failure swing. This one. So I think I'll have to put it here. This is a failure swing which the market made. So we can see from the market here we have a downside movement, then we have a lower high, which was this one. Then we did manage to have a high, which was this one, which the market didn't manage to break. So the market went down again and form a low over here. Then the market went up and form another low over here. And the market went up again and form a low over here. So this one is the low point which was made by the market. So what we need to see is to mark this recent low here. After marking this recent low here, we can see that the price was struggling to break it. So after seeing that, I think I'll have to mark these areas. Let me double click it. Mark it as monthly This is monthly. This is monthly. This is monthly internal. This is monthly internal high. So we can see that we had a monthly internal high over this area here. Sorry, yeah, this one is it's okay. We have a monthly internal high over that point. So the low was this one. So I'll have to go and check the liquidation process from the daily time frame. So let me see how the daily market plays out. As we can see from there, this was our monthly internal high, which was broken by this point here, and then the market went to the downside here and didn't manage and didn't manage to touch this point over here. This point over here, this order block over here. It managed to touch this order block over here, so it made us it give us enough confidence that the market is still bullish. So the market managed to tap on the order block. Then the market made a change of market structure here. Then the market went up. So what we see that the market recently has reacted to this point over here, area of this area of this area of liquidity which was formed in this level here. So the market has come and tested it, then hit made another retest, then the market went up. So from the from our analysis we knew that the market will have to we knew that the market will have to come toward this level eventually, toward this daily high. But what I took a look at I did took a look at this level over here. I saw that there at this point where there is a liquidity, at this point where there is liquidity. Let me mark let me mark it. Sorry, man. At this point here, the market managed to take all the liquidities. As you can see here, we did have this level here. This level here was tested by the market. The market tested this level, and then the market went down, and the market failed to failed to make another low. So the market is going toward this point over here. So what I did yesterday, I had to to check this recent price action over here. This recent price action over here. I had to look at the recent price action over here. So I can see here there is this one there is there was a break of market structure over this point here. This one here. So also you can take this as a high because this was the highest point. When you use the line chart you will understand it. Sorry. This, as you can see, this one is a high if you use the line graph. So if you mark the highest, this one, you can see that we had a market structure break over that point. So after I knew that we had a market structure break at that point, at this point here, so I tried to mark these areas. I try to mark this area as my point of interest where the price must have to come and break above here. So what I saw yesterday, I did mark this level over here. I did mark the recent low and the recent high of the previous candle, which I mean which was the Friday candle, so that we did have to get this entry here. So I marked it very well, and then I have to remove this line over here. I need to put a trend line which will make easy for me to remember the points if I go to the lower time frame. So as you can see here, this one was the high which was made. So I'll just call this one was it was January 25th. It was 17th January. I think it was I don't know. I think it was Monday. Oh, no, not Monday. This was Friday. Then Thursday. Then Wednesday. Then Tuesday. Then Monday. Yeah, this was Monday high. So let's mark this one as sorry, my internet is kind of slow. Let's write it Monday high. So this was the high created from Monday, and what I want to do is to check the candlestick inside the candlestick of Friday, so that I can get the entry of today. So what I came across is I went to the 1 hour time frame to see the liquidation process which happened in the market. So let me let me reset this sheet here. So Monday high was wiping out by this candle here, and after being wiped out, no, Monday candle was not already wiped out. Sorry, this candle was not already wiped out. Was not already wiped out. What I did is that there was a level here, which was we did have a high, a low, and a high. Then the market shifted at this point here. This is where the market shifted and started a trend to the downside. As you can see here, the market started a trend to the downside. So what happened here is that we did think if the market will come back to take this level here, the market eventually the market will eventually fall. But what happens is that the market tested this level and then retested it, and then the market break this zone, this level, not zone, this level. After the market broken this level, it made this engulfing candle over here. So what happened is that if an area which is tested many times get to be broken, it becomes a flip level. So also we did have another confluence of engineer liquidity which was engineered over this point here, which was engineered on this point over here. So we did have an engineered liquidity. So we have a flip and then an engineered liquidity. So the market managed to came inside and make this candle over there. So what I did, I went to the 15 minutes. After going to the 15 minutes, this was not yet from this area here. This area was not yet formed. This area here was not yet formed. That area from there, it was not yet formed. The market was like that. So when I went to this time frame, I remember what I did. I just look at the recent low, which was this one. This was the recent low over there. After looking toward this recent low over there, what I remember, I started looking where the market started to go up. As you can see here, this is the point where the market started this movement, going up movement. So we can see that the market after breaking this level here, the market came and tested this low over here. After the market tested this low over here, the market broke this level here, and also came and tested the liquidities which were formed over here. It means that the liquidity consumption was complete at this level. Also, the market made another break over here. Then the market came and tested the order block over here. So what happened is that the market made another high, another break over here, but the market didn't came to test this level. The market did manage to break this area over there, but didn't came and test that level. So what I was looking for other confluences, and I saw that, you see this area here, it is a very very fresh level, and as we can see, we do have another confluence over here. You can see the prices came and failed. The price came here and it went down. Then it made a formation. Then this formation was tested by week. Then it made another formation over here. So what I will consider is just this formation which was formed over there, because the market managed to come inside and close above the level. So if the market came and close above the level, it means that that level is not very strong. Maybe if until we see another break of structure and a formation is formed, so that we can rely on that level. So what I saw, it was just this, and I had to put my I had to see this level as an area of liquidity which the market will have to wipe it out. So let me delete and put a trend line over there. I think it will be nice. So we need to have this. We need to have this trend line here as uh, as our area of liquidity. Okay, let me double tap this one. Put it some liquidity. So some people were liquidity over there. So this point was like a liquidity. Then this was my entry and my stop loss was over here. So I think I have to take this out here and make it and make it my stop loss. So I have to take my entry and put it over here. My stop loss was about like not many pips. I think it was 15 pips. Yeah. And the take profit should be this high over here. It was about like 79 pips. It was not bad, just a good entry. But also, we are focusing to get more, to earn more. So what I'll do, I just have to delete this line over here. I don't need it right now. So what I need is to stretch this line a little bit more. Yeah, to that point there. Okay, so I think we are good to go with our. I think we are good to go with our analysis. As you can see, the price started moving. My network is not very good, so please sorry for that. Let me just remove this. As you can see here, so the market came and tested this level over here very nice, and the market, I think if we can replay it from here, it's nice, but my network is not good. It's not good at all. It's not good at all. My internet connection is is very slow, so I think that's why the replay option is it's kind of weird because as you can see here, the replay option is okay. Oh my god, our network in Africa is very, very, very poor. But anyway, let me not waste your time. Let me not waste your time. I think you can see the entry which was made from that point, and what you need to know after understanding the area of liquidity, you should look for liquidity consumption. The liquidity, all liquidity filled, which areas of liquidity which were not filled. It's a good way to make you be a good trader. And this entry was very nice here. As you can see, it's very, very, very nice because this liquidity point was taken out. So peace.